Hi, welcome to the Crypto Republic. Before we dive in, if you're serious about staying ahead in this once-in-a-lifetime financial shift, make sure you like this video, drop a comment, and subscribe to the Crypto Republic. There's a quiet storm brewing in the financial world. Most people can't feel it yet, but the banks can. For over a century, they've ruled the global economy, printing, lending, and controlling the flow of every dollar, yen, and euro that moves across this planet. But now, something they can't control is rising, and it's called XRP. Inflation, debt, and digital disruption. Three words that have bankers losing sleep. For decades, the old system survived by patching cracks with regulations and bailout. But every time they printed more money to fix the problem, they only made it worse. It's like giving morphine to a patient with a broken leg. The pain goes away, but the break never heals. What most people never realize is that the world's entire financial plumbing, the system that moves trillions of dollars across the borders every single day, still runs on rails built in the 1970s. Slow, expensive, and shockingly outdated. Think about it. We can send an email around the world in seconds, but moving $100 from one country to another can take days. That inefficiency is where banks make their billions. Fees, delays, and hidden conversions that most people never question. But then came Ripple, and with it XRP, a digital asset that doesn't wait 3 days for clearance. It moves money in 3 seconds. No middlemen, no borders, no delays. For the first time in modern history, technology threatens not to just compete with banks, but to make them obsolete. It started quietly. No grand announcement, no flashy IPO, just a white paper, a few lines of code, and a vision. What if value could move as fast as information? To most people, that sounded impossible. But so did the internet in 1993. Back then, newspaper moguls laughed at the idea that websites could dethrone billion-dollar media empires. 20 years later, most of those papers don't exist. History doesn't repeat itself. It updates its code. Inside corporate boardrooms, a strange mix of panic and denial took hold. JP Morgan, HSBC, Citibank, their analysts whispered about Ripple's test corridors in Asia and Latin America. Bankers mocked it publicly, but behind the scenes they ran experiments. Could this thing really move millions across borders without SWIFT? The results stunned them. XRP didn't just work, it worked better. The fear wasn't just about technology, it was about control. If money could move freely, who would need intermediaries? Who would need the gatekeepers? To the banking elite, XRP wasn't just a coin. It was a threat to the entire architecture of finance, and they knew it. By the time government started to pay attention, it was already too late. Ripple's network was expanding. Central banks from Singapore to the UAE were running pilots. Remittance companies were slashing costs. And for the first time in decades, global liquidity was being challenged by something not born in Wall Street, but on the blockchain. That's when the narrative war began. The media painted XRP as risky. Regulators called it a security. Exchange delisted it. Headlines screamed, lawsuit, while banks quietly invested in blockchain research. It was the oldest tactic in history. If you can't stop the revolution, at least slow it down. But like every paradigm shift before it, from the printing press to the smartphone, the truth doesn't stay buried for long. This is where the real story begins. How XRP turned fear into fuel, and why the world's biggest banks are now fighting a losing battle to contain it. By the 2020s, the walls started closing in. The global economy was drowning in debt. Inflation was running wild, and governments were printing money like confetti. But behind the noise, XRP kept moving billions, flowing quietly through corridors in Asia, Europe, and Latin America. Banks were losing their grip on one thing they'd always controlled, the speed of money. And that's when they struck back. It started with headlines: fear, uncertainty, and doubt, unregistered securities, unstable asset, lawsuit incoming. They painted XRP as dangerous, unpredictable, even criminal. But look closely and you'll see the fingerprints of an old playbook. The same one used against the early internet, against PayPal, against every innovation that threatened legacy control. When the SEC filed its case against Ripple, it wasn't just about a coin. It was about precedent. If the regulators could label XRP a security, they could strangle its use before it reached the masses. Overnight, exchange delisted it. Liquidity evaporated. Traders panicked. But Ripple didn't fold. They fought. Brad Garlinghouse and David Schwartz turned courtrooms into classrooms, breaking down the technology, the use cases, the utility. The argument was simple. This isn't a stock, it's the future of payments. The irony? While the U.S. tried to choke it out, the rest of the world moved forward. Japan called XRP a currency. Singapore approved Ripple's license. Even banks in Europe began testing an on-demand liquidity solution powered by the XRP ledger. It was like watching history repeat itself, a technological revolution slowed by bureaucracy, only to explode later under global demand. Think of Nikola Tesla, laughed out loud of boardrooms, only for his patents to power modern civilization. Or the Wright brothers, mocked by experts until fight became undeniable. XRP was walking that same path from ridicule to revelation. Meanwhile, something even more interesting was happening. Every attempt to suppress XRP made it stronger. Communities formed. Developers kept building. Projects like XRPL sidechains, DeFi, bridges, and tokenized real estate pilots popped up worldwide. And then came the shockwave. Judge Soros' ruling. XRP is not a security when sold on public exchanges. The decision hit like thunder. Exchanges relisted XRP within hours. The price spiked. The sentiment flipped. After years of being written off, XRP was suddenly back in the headlines, and this time as the crypto that fought the law and won. But that victory carried a warning. The judge's decision was also revealed what the banks feared most. XRP could exist legally and independently of them. That meant Ripple, and by extension decentralized finance, no longer needed the permission of old institutions to reshape their future. Still, the battle was far from over. The SEC hinted at appeals. Banking lobbyists began pushing new narratives. CBDCs are safer. Blockchain is risky. Trust your bank. You can almost hear the desperation in the messaging. Because here's the truth they'll never admit. Central bank digital currencies are the bank's plan B. An attempt to copy blockchain speed while keeping the same control. But there's a problem. CBDCs isn't freedom, it's surveillance. Programmable money isn't programmable people. If XRP represents decentralization, CBDCs represent digital handcuffs. And that's what this next phase is all about, to control the future of money. Every great financial revolution has a breaking point, a moment where the system can no longer sustain its own weight. For fiat currencies, that moment is fast approaching. The dollar is strange. Inflation is no longer a headline, it's a lifestyle. Nations are de-dollarizing. Trillions are shifting east. And beneath it all, a new network is quietly preparing to take its place. That network runs on the XRP ledger. Fast, decentralized, and borderless. XRP has become the quiet backbone of a new digital economy. What began as a small fintech experiment is now a global infrastructure layer for real-time value transfers. In Asia, central banks test cross-border payments to RippleNet. In Africa, microbanks use XRP corridors to cut remittance fees by 90%. Even in Europe, regulatory clarity is allowing blockchain liquidity hubs to blossom. Meanwhile, in the West, the storm builds. Banks are panicking, not because they don't understand XRP, but because they do. They see what happens when money no longer needs them. When a single wallet can move millions with no wire fees, no delays, no gatekeepers. When a system built on trust replaces one built on control and debt. And here's the kicker. They're not just watching it happen, they're preparing for it. Quietly, banks are integrating blockchain architecture under the surface. JP Morgan's Onyx Network, Swift's CBDC Sandbox, the BIS Innovation Hub, all scrambling to stay relevant in a future XRP already built for. It's like watching the final days of the Roman Empire. They didn't collapse overnight, they evolved into something else. The old guard will adapt, but they'll never again hold absolute power. History always rewards the innovators, not the imitators. Let's talk about numbers for a second. Global cross-border payment volume is projected to hit $250 trillion annually. Even if XRP captures just 1% of that flow, utility demand alone would dwarf its current market cap. That's not hopium, that's simple math. The XRP ledger wasn't built for speculation, it was built for movement at scale. And the upgrades keep coming. Side chains, automated market makers, tokenized real estate, and stablecoin integration through RLUSD. Ripple's focus isn't to replace the banks. It's to make the system so efficient that banks have no choice but to use it. But behind every chart, every upgrade, and every legal victory is something deeper, a philosophy. XRP represents the free flow of value, the same way the internet represented the free flow of information. It's not the democratization of finance, borderless, permissionless, unstoppable. And that's why the system fears it, because when value moves freely, control disappears. So what happens next? The world is heading into what analysts call the Great Reset, a transition from analog finance to digital liquidity. Not conspiracy, not fantasy, but evolution. The same evolution that took us from the telegram to the smartphone, from cash to countlessness. And in that evolution, XRP isn't an outsider anymore. It's becoming the standard. As regulators settle and adoption grows, the question isn't if banks will use it, it's how much control they'll lose in the process. Every court ruling, every partnership, every pilot brings us closer to that inflection point. So when you hear banks in panic mode, understand this. They're not afraid of losing profits. They're afraid of losing power. Because for the first time in over a century, the financial world isn't being rewritten in marble boardrooms or central bank vaults. It's being rewritten in code, open, transparent, immutable. And that code doesn't ask for permission. So when you hear banks in panic mode, understand this. They're not afraid of losing profits. They're afraid of losing power. Because for the first time in over a century, the financial world isn't being rewritten in marble boardrooms or central bank vaults. It's being rewritten in code, open, transparent, immutable. And that code doesn't ask for permission. If you made it this far, you're not just watching, you're early. History doesn't wait for the crowd. It rewards the ones who saw the pattern before it became obvious. XRP isn't just a coin. It's a chapter in the story of financial evolution. The question is, will you be reading about it or will you be living it? If this opened your eyes, smash that like button, ring the bell, leave a comment with your thoughts, turn on notifications, and most importantly, subscribe to the Crypto Republic, bringing you the truth about XRP, global banking moves, and the wealth transfer already unfolding. Don't just watch history happen. Stay informed, stay ahead, stay in the Republic.